Time and time again, the mainstream press has been dead wrong when it comes to the stock market. From the dot-com blow-up, to the financial crisis, to the panic last year. Why is it that all the so-called experts always get it wrong? Today, we're joined by the top technologist at perhaps the only research firm in America that's nailed every big call, going back to Black Monday in 1987. In 2000, for example, this group called the exact peak of the dot-com boom, saying a day of reckoning was at hand. They called the housing crash, the crypto crash, and last year, when not a single analyst forecast a chance of recession, they warned Americans again and told them to get ready for a pullback. Today, we sit down with Jeff Brown, arguably America's most accurate technology investor. He singled out Bitcoin in 2015 before it shot up almost 100 times, and picked the #1 tech investments of 2016, 2018, 2019, and 2020. And now he's coming forward to issue the most urgent warning of his career.
I believe we're on the cusp of something we haven't seen in 20 years. Fortunes will be made and lost over the next few months.
If you've got money in the market and are confused as to what to do next, or if you've been debating getting back in as tech stocks seem to be making new highs on a daily basis, this is the must-see presentation of the year. As you will discover, a second wave is upon us. And what you do today will either determine if your nest egg stays on track or plunges down fast. Get ready for a special Tech Minute segment, the second wave. Buy, sell, hold. If you're in the markets right now, these are strange and stressful times. While some experts believe we're in store for a greater depression, not seen in 100 years, others are convinced that the worst is behind us. So what's the truth? Hi, my name is Chris Hurt, and today we are very fortunate to be sitting with the one man who can probably help guide us better than anyone else, Jeff Brown. Thank you very much for being here with us. It's a pleasure.
It's a pleasure, Chris.
So, Jeff, in early March of 2000, your firm called the exact peak of the first dot-com boom, saying a catastrophe lay ahead. And from there, sure enough, the NASDAQ did go on to drop 77%, and it wiped out millions of investors in the process. Your firm also predicted the housing bubble, the top in cryptos, and on January 6th, 2020, 45 days before last year's crash started, you were right again, warning Americans a big pullback was coming. No one else that I've found comes close to matching your firm's accuracy in forecasting big movements in the market.
Well, Chris, I'm an optimist by nature, so it never feels great to be right on those big down calls, but I never shy away from telling the truth as I see it.
Right, an optimist. And since retiring from professional life, a career in which you worked on the very first Boeing 777 and led teams at both Qualcomm and NXP Semiconductors, where you turned that company around and helped propel it to a 761% gain, you have been issuing a string of stock recommendations that quite simply have been off the charts. In 2015, you brought people's attention to something called Bitcoin before it shot up nearly 100 times. In 2016, you singled out NVIDIA. It then went on to become the #1 stock of the year. In 2017, you did it again. You picked AMD, and not only did it go on to top the NASDAQ 100 in 2018, it topped the chart in 2019 as well. Last year, amid all the chaos and turmoil caused by COVID-19, again, you were right. You picked the #1 tech stock of the S&P 500. It really is incredible, Jeff. How do you do it?
Well, Chris, it's certainly been a great run for sure, but this isn't work in the traditional sense for me. It's really my passion, and I really do enjoy every minute of it.
Well, we're very fortunate that you do. And for folks tuning in right now from home, Jeff is going to discuss his new #1 pick with you today. And he'll also be making live here today on camera another major prediction. This is a second wave that, Jeff, I understand is going to catch many investors by surprise.
That's right, Chris. I believe we're on the cusp of something we haven't seen in 20 years. You see, much like in 1999 and 2000, many popular tech darlings of today are going to go by the wayside. Some, by my estimate, are in line to fall by as much as 92%.
All right, 92%. That sounds like you're predicting a major crash.
Well, Chris, here's what my research tells me. We're literally on the verge of a splintering in the market. Some tech stocks, which have reached absolutely absurd valuations, are going to crash hard. And at the same time, there's a small segment of the tech world, largely ignored until now, that's rising up fast. And billionaires, including Jeff Bezos, are quickly shifting their money into this small sector. And I call these market-resistant stocks. And over time, these types of shares have turned $5,000 into as much as $1.5 million. Just one of these stocks can change your life dramatically.
Well, that is very exciting. So it almost sounds to me like there's almost two different stock markets that are emerging right now.
That's right, Chris.
So on the one hand, many popular stocks are going to tank, but on the other, some are going to go through the roof. I got that right?
That's a really good way to put it. And that's the whole reason I'm here, to help investors get on the right side of history. So I believe we're at an absolutely pivotal moment in time, and for many investors, what they do in the next few weeks will shape their future. And here's the thing, Chris. COVID-19 has changed the world. It has absolutely changed the world. Mm-hmm. Some businesses have been waiting literally for years for a moment like this to happen. And then overnight, a new reality occurred. You have many seniors who never bought anything online, and then all of a sudden, they're having groceries delivered to their house. They're buying prescriptions online and seeing how convenient it is. They don't have to stand in line anymore, and it's often much cheaper to do so. In short, the coronavirus has led to major changes in the way the world works that usually takes years, in fact, sometimes decades, to occur. And for some companies, that has meant destruction, and for others, it's a real boon. So, you want to be in the right stocks, but sadly, many people's portfolios are built on quicksand. One small shift, and it will all crumble to pieces.
I see the point that you're making here, Jeff. So why don't we go ahead and get started here? I want to know about your second wave prediction. I'm sure everybody at home does too. And also, if you can, I'd like to hear about your recent trip to California. I understand that there was a very urgent development with your number one pick that we're going to hear about today, and that you flew last minute to a private $500 million research facility. And I'm going to guess that was in Silicon Valley.
No, Chris, it was actually 7 hours south of Silicon Valley. And yes, it's quite urgent and exciting. The company I've found is at the heart of a 5,900% technological boom that's going on right now. And recently, they received a rare approval from the federal government that I believe will absolutely light a match under their stock price. Well, let's just say there's going to be some fireworks.
Well, it sounds like it. It's amazing. All right, so for all of you at home, get your pens and your notepads, whatever you need, get those ready, because Jeff is, again, arguably the top technology expert in the world right now. So no doubt you're going to learn a ton here. So Jeff, this second wave, tell us about that. And I hope that you're not talking about the coronavirus.
No, that's right, Chris. The second wave I'm referring to is rather a new crash I expect we'll see soon in the market. A second wave of falling prices.
Like the crash we saw back in 2020.
Well, for some investors, it won't be catastrophic. But sadly for many, perhaps most, especially those who've bought into all the recent hype we're seeing, it actually could be much worse.
So, there's a number that stuck in my head from earlier on. You mentioned 92%. Could stocks really crash 92%? That's obviously a huge number, very severe. That would probably be the worst crash on record.
Well, Chris, it's a very fragile market right now, but there's an important distinction to make. I don't think the broad equities market, for example, the S&P 500, that most people use as a benchmark, will crash 92%. Overall, stocks in general might only fall about 25%.
All right, well, that's definitely a relief.
Yes, but here's the thing, and this is very important for your viewers, Chris. As I said, there's going to be a kind of splintering in the market. Some stocks, including many investors are blindly chasing right now, need to fall around 85% to 92% to be fairly valued. But others will actually soar. In fact, the coronavirus has almost guaranteed these will rise dramatically.
All right, well, I'm a little confused here for just a moment. How can some stocks rise while others fall to the ground?
Chris, well, you remember the late 1990s and early 2000s, right?
Oh, sure. Some of it. You mean the stock market?
Of course, Chris.
Well, yes, there was the big run-up in tech, followed by the crash, the dot-com explosion that everybody remembers, right?
Yeah, precisely. So that's the perfect analogy to what's going on today, Chris. It's Pets.com versus Amazon all over again.
Okay, Pets.com versus Amazon.
All right, so in the early 2000s, stocks got whacked. But did we see winners and losers?
Yeah.
Of course. So let's take Pets.com. If someone bought into the hype and invested in that stock, well, they absolutely got demolished. They lost all their money. But this was really an easy mistake to avoid. I mean, Pets.com was the poster boy for .com stupidity. They spent twice their yearly revenue, not profits, on a single Super Bowl ad. A single ad.
That's nuts. And I'm guessing that ad did not bring in 2 years worth of revenue.
Of course not. The company shut down within months. But here's the thing. Other investors took a different approach. They did their homework and invested in Amazon. Some were able to pick up shares for 10 cents on the dollar. Kathy Wood, who started a big tech investment firm, said she got laughed at when she bought Amazon for $10.
Wow.
But look who's laughing now, Chris. Look at it today.
Wow.
It's a blip on the screen.
Right. Yeah, that's really remarkable. I can't even see the drop back then.
Well, even if you didn't get in at the bottom, heck, even if you were off by an entire year, you were still able to make a life-altering fortune. Amazon, incredibly, recently topped $3,000 a share. It's up over 500 times. You could have literally turned a $5,000 investment into $2.5 million. That's how millionaires are made.
Right, but Jeff, Amazon, I mean, you had to have been lucky to pick Amazon. That was an isolated case. I mean, almost like finding a needle in a haystack.
Yes, Chris, Amazon was an amazing pick, but it was far from an isolated case. Consider this. Instead of buying e-toys, which plummeted from around $80 down to zero, you could have bought eBay, which went up as much as 12,000%. Or instead of buying Webvan, a precursor to supermarket food delivery services, 20 years too early, look at what Bezos did. He put $250,000 into Google, and his stake morphed into as much as $4.8 billion.
Yeah, what a play for him. Yeah.
Is it any wonder he's now the world's richest man? Look, here's the frustrating thing, Chris. Say you got the trend right. You absolutely knew the internet thing was going to be big, but you picked the wrong companies. Well, you would have been better off staying out of the market completely. A similar thing is playing out today. There's a lot of blind investing going on, and the trend followers are going to get hurt.
All right, so if I understand what you're saying, some companies today are the equivalents of Amazon 20 years ago, while others are more like Pets.com. I got that straight?
Correct. So we're going to see a second wave. Some tech stocks are going to sink severely, but others, the modern versions of Amazon, could end up paying for your entire retirement in one fell swoop.
Wow.
That's why I say this is a defining moment and why it is critical people align their portfolios correctly today.
All right, so thank you for clarifying that. I understand, I think, what you're saying. But at the same time, can I offer some pushback?
Yeah.
Because we've seen the numbers. Stocks have soared. Some jobs are coming back, right? I mean, isn't there a chance that this second crash may not happen?
Well, of course, anything can happen. I don't have a crystal ball, but ask yourself this. Don't you have the feeling that something isn't quite right with the markets right now? Is it natural that stocks soared back within just a couple weeks as if nothing happened at all? Look, some of the stuff we're starting to see is very reminiscent of 1999. Have you heard of Hertz? Right? Crazy story. the stock declared bankruptcy. Then, all of a sudden, over 100,000 retail traders on Robinhood, an app that lets you trade stocks for free, when the stock dropped to 50 cents a share, these traders bought it. They thought it was a bargain, so they pumped up the stock 10x to over $5 a share. They didn't realize this was a bankrupt company. We're seeing this kind of insanity all around the market today, Chris. People are being greedy in all of the wrong places.
Okay, but again, the numbers, Jeff.
But I agree, Chris. Some of the numbers are encouraging, and you know, I'm an optimist. But at the same time, we've now officially entered a recession. We still have over 10 million people out of work. Tech companies have laid off workers by the thousands, and many of those jobs simply aren't coming back. And this hasn't been fully priced into the market yet.
All right. So what, in your opinion, is going to spark this second wave?
Well, first is basic economics. Companies lost billions in the last shutdown, but as I mentioned, that's not being priced in. There's a huge disconnect right now between corporate profits and equity value. It's probably the widest gap in history. The second reason is an actual second wave in the number of COVID-19 cases we're seeing. Another major market panic could spark just as it did last March.
All right, but Jeff, what can we do? I mean, what can the average investor do at home to help his family prepare for this? Should we sell our stock holdings? Should we hold on to them? I mean, what's the solution here? What's our reaction to be?
Well, Chris, it's not a time to panic and sell your entire portfolio. I know many analysts who did that back in March, and they really massacred the savings of the people they were supposed to be helping out. They guided investors right into the slaughterhouse.
I know that you're right about that. You actually recommended something very different back in March yourself, right?
That's right, Chris. I knew this setback was temporary, and I actually told all my readers that this was a historical buying opportunity. I stressed not to panic, not to sell their stocks.
Let's just remind everyone of how that worked. We've got a clip here. Take a look at this.
And most importantly, things are absolutely going to get better. I know it's a very uncomfortable time in the market. In fact, I can't even remember in the last 45 years, only 3 times that were like this. One was October 19th of 1987. Of course, that was the notorious Black Monday, the period right after the tech bubble bursting. And at that time, the valuations of tech stocks were far worse than they ever were before COVID-19 came around. And then, of course, during the financial crisis in 2008 and 2009. One thing is consistent with all 3 of those crises. They were some of the best times to invest in the stock market. They provided the best opportunities for the largest gains. And I believe that's where we're at.
But how can you tell a good company from a bad one right now, from an investing point of view?
Sure. Well, there are a lot of factors that go into it. And of course, that's what my research firm specializes in. But to give you a quick example, are you familiar with Zoom video communications?
Right, the conferencing, video conferencing.
That's
sure.
right. That's a service it seems like everyone is using these days to host video calls. Well, look at Zoom's stock chart.
All right.
It's up 5x in a year.
That's good.
Well, it was good if you invested 12 months ago, but the valuation today is insane, Chris. It's absolutely insane. In fact, the stock price would need to get chopped down by over 90% before I would consider recommending it to my subscribers.
Okay, but why is that? I mean, yeah, maybe it's high, but clearly the service is in demand right now. We all know that. Seems like the right product at the right time.
Yeah, it sure seems like it. But the numbers don't lie. There's a simple metric I like to look at. It basically compares the price of a stock to the sales that the company generates on an annual basis. We call it the price to sales ratio. Well, for Amazon, their price to sales is roughly 5. That means investors believe that Amazon is worth 5 years of sales. Very reasonable. Microsoft, the price to sales is 11. That's pretty high. Yeah. The last time it was that high was actually back in the first .com era. But Zoom, do you want to guess what their number is?
Well, judging by the way you've set me up here, I'm guessing it's high.
Okay.
20. I don't know. 30, 35?
55.
What? So Amazon's at 5 and Zoom's at over 50?
That's right. Let me ask you, is Zoom 10 times more valuable than Amazon?
I don't know.
The answer is no, Chris. Amazon is a stud, but Zoom, there is a lot of pain ahead.
All right, so Zoom. That is just one of the popular tech companies that you're seeing trouble ahead for, right?
That's right. There are 5 tech darlings right now that are absolutely toxic.
And while we're on that subject, you've put all of those names, all 5, and their stock tickers as well, into a new report that our viewers can claim.
That's right.
And I think we've got it. Thank you, Lance. I've got it right here. It's called Toxic Tech, 5 Tech Darlings to Dump right now. This is it. And I'm guessing Zoom is in here.
Well, it's definitely up there. But in my opinion, there's one company right now that's hands down the single worst in America. But for some reason, tech investors love it. In fact, nearly 2.5 million separate investors own this dud. It's in 100 different funds, including Vanguard's popular 500 index fund. Fidelity, BlackRock, State Street, Schwab, they own gobs of it. $16 billion in total.
According to his last financial disclosure, even former President Trump owned shares.
Really? I'm definitely going to need to check out some details in this then, that's for sure.
Absolutely, Chris. I don't know if you've got money in the market right now, but if you do, there's a very good chance you're exposed to one of these toxic stocks and don't even know it.
All right, I tell you what. Thank you, Lance, very much. So we've covered the losers. Why don't we get to the more optimistic side of things? The side I know that you love best. We all do. What are some of the winners that you see coming along?
Sure, Chris. Look, as I mentioned earlier, COVID-19 has changed the world, and for some companies, it has really been a blessing in disguise.
Right. Can you give us an example?
Well, many of the companies that will see exponential shifts are lesser known. But to give you a quick, well-known example, let's think about a company like Netflix.
Okay.
So can you guess how many new users, new subscribers Netflix added since COVID-19 started?
Oh boy, I don't know, but it's got to be very high.
26 million. And that was in the first 2 quarters alone. In fact, subscriptions have now reached record highs. And they added almost 37 million new customers in 2020 alone.
So folks at home should write down that name on their piece of paper, Netflix.
Well, don't get me wrong, Chris. Netflix is a great company, but it is way overpriced.
Okay, so what is your top pick? I know you were one of the very first to put 5G and AI, artificial intelligence stocks on the map for average investors. I saw that some of your recommendations are up 106%, 204% as of late last month. That's a triple. So I'm guessing maybe a 5G stock, AI stock.
Well, it's true. I absolutely love 5G and artificial intelligence plays, and my readers have made out like bandits. But right now, the company I'm most excited about, the one I flew to California for,
right,
is in the one sector I believe is a powder keg of opportunity today, biotechnology.
Biotech.
That's right. Chris, this will easily be one of the, if not the biggest bull market over the next decade. Think about it. What industry is getting more attention now than ever before? Where is all the money, the VCs, the government funding, where's all that money flowing into?
Biotech.
Yes, VCs invested $12 billion in the first half of 2020 alone, a new record high, and about $23 billion for the year.
All right, so I can see that does make sense. I mean, everyone is scrambling to find a cure. Seems like every day I'm seeing a new biotech stock jump up. Moderna, didn't they jump up recently like $20 a share when they thought they had a cure?
Yes, their stock's gone way up since they introduced their vaccine. They're up almost 8x in a year. Sorrento, their stock shot up 239% in just 3 hours.
This market is hot right now, Chris. That's why billionaires like Jeff Bezos are investing hand over fist. In fact, Bezos has already put over $130 million into this sector alone. Even Warren Buffett, who's typically avoided tech completely, recently invested close to $200 million through Berkshire Hathaway.
So what you're really saying here is that the smart money is going all in.
Exactly. They know it's the one sector set to explode. And look, what most people don't realize about biotech stocks is they don't move in the same way as other sectors. They are market resistant.
Meaning they don't crash.
Well, I wouldn't say that. There's risk in any stock. But what I mean is,
Take the crash in March last year. Do you know what the top stocks were?
Biotech.
that's right. After the first quarter, when stocks were the most volatile, my team and I recommended the number one stock in all of the S&P 500.
That's 500 stocks in total, right?
Right.
And you picked the top one?
Correct. A biotechnology stock. Even during the crash of 2008, the top winners of that year, going up 84%, 108%, even 382%, could all be found in biotech. Chris, let's have a look at this chart. It will drive the point home even more.
Okay, I'm seeing Intuitive Surgical. That I take it that's another biotech, right?
It is. And the reason I wanted to show you and your viewers this chart is to illustrate the explosive power of picking the right biotech stock. Chris, Intuitive Surgical went public in 2000. Was that a good year for stocks?
Oh boy, no. It's probably one of the worst.
It was horrible. But Intuitive was, and still is, a great company. Their surgical robot, the Da Vinci, was a tech marvel. It still is. And through 2000 to 2008 and this recent crash, it's not only resisted the market's downward pull, but the stock is literally up over 300x.
That is a huge gain.
It is. That turns $5,000 into $1.5 million. And for most people, that's obviously life-changing money.
Sure.
It pays off your mortgage. Chris, you've got kids, right?
Yeah.
Well, you could pay their tuition at the most expensive Ivy League college in the country, even with today's sky-high tuition. That's why I'm so excited to share my top biotech stock.
I'm excited too. What is your top play, Jeff?
Well, my top biotech is playing a major and critical role in the research going on in COVID-19 right now. It provides the testing equipment researchers need to evaluate their different potential treatments for the coronavirus. This equipment is used by over 10,000 research labs worldwide.
Did you say 10,000 different labs? That is a huge number.
Yes, this isn't your usual type of biotech company, though. It's not developing a new therapy, but rather it is the bedrock for all of biotech, which makes it that much more potentially explosive. In fact, the FDA recently issued them an emergency use authorization, a kind of fast track, which means this company will be the first, the absolute first, to use genome sequencing to diagnose COVID-19. And that's critical, especially with the second wave now weighing upon us.
So, Jeff, I'm going to take a wild guess here. Obviously, if this company helps treat the coronavirus, they are going to be worth a ton of money.
Naturally. And this company has got a phenomenal business model, one of the best in the world. In fact, in the past, another tech company used it to grow their valuation from a mere $500,000 to $57 billion.
Billion. That is I can't even calculate that percentage.
I'll save you some time. That's a 10,000-fold increase.
Yeah.
Now, obviously, I'm not saying this company is going to go up 10,000x, but they are in a unique position in terms of their testing capabilities. They are truly in a sweet spot. However, regardless of what happens with the coronavirus, they're going to make a boatload of money, and here's a chart to prove it. As you can see, their revenues have been going up exponentially for years now.
Right, and that's remarkably stable. So this is not a flash in the pan.
Exactly.
All right. So, Jeff, let's get to this recent journey that you made in Southern California. We've got a clip here of you going into this private $500 million research facility. Tell us, what are we seeing here, and what did you discover?
Sure. So what you're looking at here is me stepping inside 4570 Executive Drive in San Diego, California. That's the location of Human Longevity headquarters.
Human Longevity.
Yes, Chris, these are biotech pioneers. The company was co-founded by Peter Diamandis, who started the multi-million-dollar X Prize, and Craig Venter, a genius I'll get back to a little bit later. Anyway, this private facility is doing cutting-edge research on life extension, a market set to reach $600 billion by 2025.
Okay, so I take it that is your number one biotech stock, Jeff? Human longevity.
No, Human Longevity is a great company, but it's not my top pick.
What?
They're still private. So investors can't buy their shares on the stock market right now.
I got you. Okay, so why is it that you went to visit them?
Well, because this lab makes use of an advanced piece of equipment, something called a gene sequencer. I traveled to San Diego to get my genome sequenced.
Your genome?
Yes. Chris, you probably heard about companies like Ancestry.com or 23andMe.
Sure, yeah.
Well, what these companies do is send out genetic testing kits which help people glean certain information about their family tree, their ancestry, and give some basic health information. But it actually goes much further than that.
Okay, so my next question is, why not just order the test kit and have done with it? Why did you travel out there?
Well, that would have certainly been easier, and it would have saved me $19,000 for the testing, plus travel. But here's the thing, Chris. Each of us has a unique genome, a specific sequence of DNA that makes us all different. To use a simple analogy, think of a book. Imagine every word in a book is a unique pair of DNA. Well, depending on how these words, these base pairs of DNA are put together, that determines the final book, if you will. Whether it's going to be a comic book or a romance novel or an action-packed thriller. Does that make sense?
Absolutely, I'm with you.
Well, in the same way, the sequence of your DNA determines who you are as a person, and it affects everything from the color of your hair, obviously mine's gray, to your health, to whether you're prone to certain genetic diseases or not. It's all determined by genetics, and that's why genetic sequencing is so important, because it's a blueprint to our own bodies, our own condition. Armed with this blueprint, scientists and doctors are now doing incredible things. It's being used to hack biology so that we can avoid sickness, and many diseases we once thought were literally incurable are now being effectively treated and could be on the verge of being cured outright.
Very exciting. Can you give us some examples?
Sure, sickle cell, beta thalassemia, other blood disorders, some forms of cancer, even forms of blindness. Chris, there's a lot of negative things going on in the world right now, but on the tech, and especially on the biotech side, we're seeing rapid, incredible advances. And sequencing is at the forefront. It's like a beach ball on a wave that gets pushed first. For those who take advantage and get in early, it could mean a spectacular shift in your wealth.
So Jeff, why spend all of this money? Did you go to San Diego for health reasons?
Well, obviously, it doesn't hurt to get arguably the highest level of diagnostic support in the world. Really, the main reason I went to this lab can be found right here, the genetic sequencer.
Right. Why is that so important?
Well, to use the book analogy again, this is the machine that's able to read all of the words, all of our DNA. The sequencer pieces together the whole story about our own bodies. And that's where the magic happens. Right now, researchers are using these devices to single out dangerous genetic mutations. Eli Lilly, for example, is using it to design custom cancer therapies. It's also being used to reduce deadly misdiagnoses. Chris, do you know that on average, only 12% of patient illnesses are correctly diagnosed by primary care providers?
12% are correctly diagnosed, which means that roughly 9 out of 10 are given the wrong diagnosis?
Yes. Now, I know that sounds incredible and, of course, disturbing.
Yeah.
But those aren't my numbers, Chris. That comes straight from the Mayo Clinic. Johns Hopkins also did a study, and they found medical errors were actually responsible for the death of 251,000 Americans each year.
Oh, man.
Medical errors are actually the third leading cause of death in America, right behind heart disease and cancer. 1 in 3 misdiagnoses lead to serious injury or death, and these screw-ups cost the economy billions of dollars.
So what you're saying is that not only will this new tech help save lives, but there's also a lot of profits that go along with that, profits that are up for grabs.
Exactly, Chris. So when the first genome was sequenced, get this, it cost over $1 billion. Now, some labs can sequence a genome for under 500.
Oh, man.
That's why more and more health insurance companies are mandating that people get their genome sequenced.
Mm-hmm.
In fact, back in 2018, only about 1 million Americans had their genome sequenced, but that number's expected to explode. 60 million people are estimated for 2025. That's a 60-fold growth, or 5,900%. So to put that in perspective, we're at a point where it's kind of like buying Amazon at $50 before its steep climb.
Wow.
Yeah, I haven't seen a setup like this since I recommended CRISPR Therapeutics back in 2016.
CRISPR, that's genetic editing, right?
Right.
All right. Jeff, weren't you the only analyst to alert investors about that groundbreaking tech?
Well, I'm not sure if I was the only one, but I was definitely one of the very first.
Right.
I know I alerted my subscribers about it on October 19, 2016, when that company went public. Had you kept your shares, it shot up 5x afterwards.
And that is pretty good.
Well, it's not bad, but here's the thing, Chris. Without genetic sequencing, there is no genetic editing. Johns Hopkins, Harvard, Princeton, the Mayo Clinic, the Cleveland Clinic, the National Institutes of Health, all the top research and medical labs in the world right now use genetic sequencers, and specifically the one created by my number one pick. Without this sequencer, all of the work being done on COVID-19 and many other life-changing treatments comes to an absolute standstill.
All right, I'm beginning to put the pieces together here. This is very exciting, but I'm not going to jump the gun this time.
All right?
Your top pick. It's the company who manufactures these sequencers.
Yes, that's right, Chris.
Okay.
It has everything going for it. It's the same type of no-brainer setup I've found in all of my past winning picks. Earlier, I mentioned Craig Venter, one of the co-founders of Human Longevity. Well, Craig is the top pioneer in the genetic sequencing space. His lab was the first to sequence a whole human genome. He did it in years before anyone thought it was possible. Well, Chris, guess who he's working with now?
Your number one biotech.
That's right.
So it sounds like this is probably the top sequencing company in the field.
Absolutely, by a landslide. But it's on almost nobody's radar, Chris. They don't make the news, and it's truly a shame. Everyone right now is too busy chasing hype stocks like Zoom Video Communications, even bankrupt stocks like Hertz.
It's crazy. So why is it that you rushed to San Diego? I'm guessing there was some sort of urgency to this play.
Correct. As I mentioned earlier, because of the role they're playing in helping solve COVID-19, this company was fast-tracked by the FDA, given a rare emergency use authorization. In fact,
Dr. Scott Gottlieb, the FDA's former commissioner, just joined their board of directors. But not only that, my top biotech also has a brand new model, a new sequencer that just came out.
Is that important?
well, Chris, it's like whenever Apple releases a new iPhone, the price of Apple's shares spikes up.
Right.
It's the same thing here. Every time this company has introduced new models in the past, it has led to a massive influx in revenue and share price. For example, back in 2007, when the company introduced its first analyzer, shares rose 238%. In 2009, it happened again. Shares tripled. In 2012, the same story again. Shares surged 365%. And in 2017, shares rose another 189%. That's all on the back of new models.
So what you're basically saying is that this stock could go up anywhere from 189% to 365%.
That's what my analysis is telling me, Chris. Remember, all those happened before COVID-19.
Right.
So it's critical people take a position now before the new model comes out.
All right. Jeff, I know that you have a huge following. Over a million folks read your daily technology newsletter, The Bleeding Edge, right? 100,000 plus pay to receive your monthly tech stock recommendations. how can people get a hold of your number one biotech pick?
Well, my team and I just put together a special report that outlines everything.
And I think it's this one. Thank you, Lance. This one right here. This is the number one biotech stock of the 2020s, why the FDA just fast-tracked the king of genetic sequencing.
That's right.
All right. So what can you tell me about the report?
Well, obviously, we cover the stock in full detail. We give out its name and ticker symbol, and as you'll see, it's an American company. So anyone with a standard brokerage account can easily buy it. We also lay out the case for the company's growth potential, which we believe is staggering.
Right. And I see a chart right here. Let me show it to everyone. I'm guessing this is the one you're talking about?
Yes.
All right. What's the timeline here? Can we wait a couple of weeks? Is this a stock we really need to buy today?
Well, obviously, I cannot give individual investment advice.
Right.
But yes, my personal recommendation would be to take a position today, or the next day the stock market is open, 9:30 a.m. sharp. I mentioned the Catalyst, their great business model, especially since their leadership team is basically run by the Warren Buffett of biotech.
What?
Chris, the leadership team here is incredibly smart with their money. One investment bagged them an 850% profit. Another one recently handed them a $278 million in cash profit.
Wow. So this is like a two for one.
Yes, that's part of the reason why Bailey Gifford, the famous tech hedge fund that bought Tesla before it shot up 30x, owns 17 million shares. It's why Morgan Stanley, BlackRock, Vanguard, they've all written monster checks to the company. It's also why Rockefeller's venture capital arm was one of the very first to fund the company. Mark my word, Chris, this is going to be a giant, a name everyone will recognize 5 years from now.
Okay. And Jeff, you are also making this report free of charge for anyone who wants a copy of it, right?
Correct. Anyone who tries out the Near Future Report, my flagship technology investing letter, today will get a free copy of my number one biotech stock report.
And your report on the 5 toxic tech stocks.
Right. In fact, Chris, because of the strange times we're facing today, my team and I have actually decided to put together a couple of extra reports to help guide people.
The more the merrier. Let's hear about those.
Sure. Well, we put together another report called The New Economy, 5 Stocks That Will Soar in the Post-COVID World.
All right. That's very interesting. What's that one about?
Well, Chris, I told you earlier how the world has changed, but the fact is many of the companies that will profit most are names 95% of investors are unfamiliar with. They're not the big names getting all the press, but that means their upside is that much higher.
All right. Let me press you for an example there.
Sure. So one is quickly becoming a major player in the payment processing world.
In fact, one of its touchless products recently processed 3 times more payments after COVID. They did $1.6 billion in 1 quarter alone. With companies choosing to avoid cash, this is a massive trend that will continue.
Another is proving to be absolutely essential in the nationwide rollout of 5G. As a matter of fact, they were recently awarded $204 million from the U.S. government, but it is an absolute steal right now, trading, get this, 75% below its all-time highs.
Wow.
And my other plays are leaders in artificial intelligence and the cloud computing space.
Right. So readers are going to be getting the full gamut of investment recommendations here, Jeff. We're talking biotech, 5G, AI, you mentioned the cloud.
Listen, from a technological point of view, this is absolutely the most exciting time to be alive. I mean, technology itself is progressing at an exponential rate. And then when you add in COVID-19 overnight, the way people do things has changed. We've now entered into a new economy. And like I said, we've now got 60, 65-year-olds buying their groceries and prescriptions online. We're working from home. And I've got news for you. We're never going back to that old normal. And I know that may be hard for some of us to accept, but the sooner we understand why, the more money we can make. So we can become a beneficiary of the situation instead of a victim. And the 5 companies I've picked out here are the ones that will reap the lion's share of the profits in the days and months to come.
Jeff, this is awesome. I absolutely love it. And I see we've got one more here. Lance is a wealth of paper supplies here. The top biotech buyout candidate, the 2,200% secret. 2,200%. Gotta love that. What can you tell me about this one?
Well, obviously, Chris, as they say, past performance is no guarantee of future results. But buyouts, especially biotech buyouts, often prove to be the most lucrative investments of all. Take Celator Pharmaceuticals. They shot up 2,200% when Jazz Pharmaceuticals acquired them.
47 Inc., they shot up 15 times earlier last year when Gilead bought them out. And in late 2019, I recommended a small biotech firm called Synthorx. Readers of mine could have bagged a 432% profit in under 6 weeks.
Absolutely incredible. And you think that your number one buyout stock could do exactly the same thing.
Well, again, I obviously can't guarantee how high it will go. Right. And for that matter, I can't say for sure if the stock will get bought out or not. But it has all of the hallmarks of a potential buyout. All the information I'm seeing right now leads me to believe it's the ideal acquisition target. However, even if there's no buyout, to me, this is an easy double, Chris. So I recommend you take a position, even if it's a small one.
That's wonderful. It's great. Are there any other reports that you want to cover?
Well, there's actually another investment report we put together, and it's especially critical today given how much new stimulus money the government is pumping into the economy. The last time I saw a setup like this, it led to a 679% profit in a month. But I'll let people get the details when they receive their other reports. There's just one last thing.
Shoot.
I did, which we've never done before, is put together a one-page blueprint. So basically, we wrote down on one single page all of our second wave recommendations. So at a glance, you'll see the name and ticker symbol for my number one top biotech pick, for the 5 toxic tech stocks, the 5 new economy stocks, my top buyout, as well as my 679% stimulus play.
I love that idea. I can see that's going to make it very easy for anybody to take action. One page.
And that's the most important thing, Chris, taking action. As I mentioned, I believe we're on the cusp of a great division, a splintering. Take a position in the right stocks and you'll walk away rich. I mean, you could walk away with an absolute fortune, but other investments will crack our nest egg completely. So we wanted to make this as simple as possible for investors to take action so they have no excuse to position themselves on the right side of history.
Perfect. Okay, so how can people get access to your research? I understand you've put together a very special offer for the viewers.
Right. Chris, if any of your viewers sign up today, my team will send them immediately and by email all 5 reports in my second wave protection plan, as well as my one-page blueprint, absolutely free. All we ask in return is that they try out our flagship investment letter, the Near Future Report. And of course, they can try that out on a completely risk-free basis.
Okay, now I've seen the numbers. Your track record, we've already established, is really second to none. You did single out Bitcoin in 2015 before it shot up almost 100x. You picked the number one tech investments in 2016, 2018, 2019, and 2020, and that's on top of a recently closed 258% winner. So I'm guessing that the Near Future Report probably comes at a fairly steep price, maybe $1,000, $2,000.
Well, Chris, judging by the responses we've received, I certainly believe it's easily worth that much. But no. My goal is to bring lucrative technology investments to the average normal investor. I've made my money, but this is my passion.
It's why I'm up at 5 a.m. in the morning talking to contacts and listening to key director calls. I can't tell you how happy it makes me feel to read the letters of thanks that I get and the lives that we're changing.
Now, obviously, all investments carry risk, and past performance does not indicate future success, but it is humbling to see our impact. So the regular price of a 1-year subscription if you can believe it, Chris, is only $199.
Did you say $199?
Yes. But we actually put together an even better deal for your viewers, Chris. So for anyone at home, please do not go to our main website. I repeat, please do not go to our main website. There you'll have to pay full price. We've set up a special page where your viewers can try out the Near Future Report for $49. That's for a full year. Try it out. If within 60 days someone decides it's not for them, it's really no big deal. Let us know. Our support staff will send you back 100% of your money.
So zero risk.
Zero risk, yes.
Jeff, I know your schedule is very tight. Before you go, I'm going to give you a chance. Any final words for our audience out there?
Yes, and I would love to speak directly to your viewers, Chris.
Please.
As I've said, we're at a critical juncture in history. The firm I'm part of has a long track record of making accurate calls. But does this mean we get it right 100% of the time? No, of course not. But let me ask you this. Do you think it's likely this market will just keep going up and up forever? I think you and I both know deep down that things have gotten a little bit out of hand. In the long run, I'm an optimist, and putting your hard-earned dollars into the right technology investments will pay off handsomely. But please, do me a favor, at least take a good hard look at your holdings. We've entered a new economy. Are your investments safe? Are you invested in companies about to be left behind? On the other side, are you set to profit from the stocks that are likely to skyrocket in the year and decade ahead? My team and I have gone to great lengths to put together a comprehensive second wave protection plan. We've labored hundreds of hours, assembled everything you need to navigate these confusing times. To help you avoid the pitfalls and spot the winners in the days ahead, including my number one play in not only biotech, but also in 5G, cloud computing, and artificial intelligence. These are all areas, as you know, that will absolutely go skyward thanks to increasingly digital, contactless, post-COVID world. Look, this is an urgent situation, and I sincerely believe the decision you make today, right now, will either make or break your investing future. Here's what I recommend. Invest $49 and get a copy of the materials I put together. Is that too much to discover the top company at the head of a 5,900% technological surge like Amazon was when it was $50 a share? I think $49 is ridiculously cheap for what you're getting, but that's just me. See for yourself. If you don't agree with my analysis and recommendations, it's no problem at all. You certainly won't offend me. All you've risked is 2 minutes of your time. But if you agree with me and you take action, this could end up being the 2 most productive and profitable minutes of your life. Years from now, you and your family may look back at the decision you made today with profound gratitude. The one day that made all of the difference in the world.
Well said, Jeff. And I guess going back to the start, you really want to invest in the next Amazons today, not obviously the Pets.com.
Not the Pets.com. Well put, Chris.
All right, so for you folks at home, we're going to be putting a link to the special offer that Jeff has put together for you, his generous $150 discount to the Near Future Report below this video. Go ahead, click on that link, and once you do, you're going to be taken to a special page where you can review everything before you actually decide to sign up. Jeff Brown, it has been, as always, a huge pleasure to have you with us.
Thanks, Chris. It's great to be here.
That wraps up today's edition of the Tech Minute. And I think you can see now why I invited Jeff Brown to be on the show. He's one of the brightest minds in tech, and his track record is second to none. He's picked more #1 tech winners than anyone else I've come across. And recently, he closed out on yet another triple-digit winner, 258% to be exact. Now, we've seen where Jeff has set his sights, biotech. The coronavirus changed the world. And I think it's obvious, but as Jeff states, some specific stocks will absolutely rise as a result, perhaps spectacularly. That's why Jeff and his team put together a comprehensive second wave protection plan, which features, of course, his #1 biotech pick, his top buyout candidate that could shoot up as much as 2,200%, as well as his 5 toxic tech darlings to avoid, among others. And he's offered us a special offer too. If you try out his #1 newsletter, the Near Future Report, you get a full year for just $49. That's $150 off the retail price that you can put directly into your pocket. There's no time left to lose. A second wave is upon us, and just like in the dot-com era, there will be monster winners like Amazon and big-time losers like Pets.com. I don't know about you, but when everything is said and done, I'd rather come out on the winning side. To see what Jeff's put together for us, click on the link below. You'll also see one last surprise edition that Jeff decided to throw in. I'm Chris Hurt, and this has been Tech Minute. Thank you for tuning in.